Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
And Asian markets also are indicating a positive start.
The Atlantic is a failed magazine.
The price action, Nasdaq was up about 0.46%, was up for the third straight day.
I think that's very unlikely, given that Donald Trump fundamentally believes in the power of tariff as a tool.
On the Nifty, we opened up mildly in the green. We're up close to around 30 points or thereabouts. Par for the course, one would say.
No fundamental problem in the economy. There is no structural imbalance that needs to be addressed.
We have about 52% of order inflow from pure refinery petrochemical, the oil and gas sector.
Unfortunately, overweight and obesity is a reality in India.
Today seems to be another session where benchmark indices appear to be consolidating.
Fundamentally, the global oil stock inventory is relatively low.
Probably be more lenient than reciprocal, because if I was reciprocal, that would be very tough for people.
Cap and small cap index over there, if you see, the market breadth of the advance to decline ratio is now firmly in favor of the decline. So
welcome back. So there's a bit of red once again back on the screen after several days of a winning run. 7 consecutive days of gains for the Nifty. Finally, that streak has been broken today. Some profit taking coming through, and markets consolidating a little bit after what's been a stupendous rise. By the way, there was important news coming in from Ashok Leyland. The board meeting has just ended, and for starters, the company has said that the reports talking about their interest in SML Isuzu are factually incorrect, so they're denying that. And it seems that Ashok Leyland is going to be subscribing to a preferential issue from the promoter entity Hinduja Leyland. More about this as we go ahead. Stock's still holding up. But otherwise, it's an afternoon of consolidation. Hi, Rima, and of course, Nigel with us joining in as well.
Hi, afternoon. So we opened around the 23,700 mark, but the sentiment in the market is turned. And as we speak, it's sub 23,550. So we're just extending the losses as the day is progressing. More than 0.5% gone in the benchmark indices. The mid-caps, which were holding up in the green in the morning, have dipped into the red. And the advanced decline ratio will also tell you a picture. About 2 stocks advancing for 1 in the red. Banks are under pressure, so banks underperforming to some extent, and there is no support coming through from the IT names. Nigel?
Well, that's right. The Nifty actually is around that 100 DMA or thereabouts, and one would have to say that till this 23,400 odd mark is holding out, this uptrend is still, intact. And on the Nifty Bank as well, yes, it's seen a sharp pullback from yesterday's high if you look at it, and coupled with today as well, but it's still holding above the 200 DMA. So you'll take comfort from that fact. You wanted to see some kind of consolidation, maybe some kind of pullback. We've had a very, very super run. So ahead of the contract expiry, which is tomorrow, some kind of a pullback, I would still say it's par for the course, nothing too worrying as per what I can see on the screen. Let's get in Mitesh Thakkar though. Mitesh, what's your view? We're holding around this 23,500. From the day's low, actually, we've come off closer around 30 points or thereabouts. What would we do? Buy into this dip or wait for low levels?
Nigel, I would want to buy one. I think, very clearly the overall bias is on the positive side. And while if you look at the retracement, the Nifty hasn't even done 38% retracement. I think the overall position is very strong. Now, the first minor intraday pivot of 23,600 was taken out, which means that the pullback would be slightly deeper. And I'm now penciling in that the support should come in around 23,400, 380 mark. So that's the buying zone for me. It's about 100 points lower from here. Similarly, on the Bank Nifty, the bigger support is around 50,700 odd levels. Though we have some bullish bias call spreads, I think overall futures buying should be done when these levels are close to the current index level. So in that sense, the direction is on the buy side, but you would want to slowly wait it out for this decline to play. Otherwise, till then you can have some call option spreads or call spreads on the bullish side on the indexes. That's my view.
What about stocks, Mitesh?
Yeah. On the stock side, I have a buy on Asian Paints, and of late the stock after a deep correction has started to bounce back nicely. So buy here with a stop below 2300, look for a target of around 2380 or 2390 on the upside, thereabouts. And the other stock which I like, that's Ultratech Cement, which I would want to buy with a stop just below levels of 11,240 and a target of around 11,900 currently.
Okay, all right, got it. Mitesh, thanks for that. We'll come back to you with some more questions in just a bit. Let's focus on something that's really been the stock of the day of sorts, and I'm talking about Siemens in even a market that's gotten a little wobbly today. Siemens has been seeing steady gains, still up over 5%, 5.5% right now. Now, the news flow is, of course, very, very clear. The NCLT has approved the demerger of the company's energy business, and this is happening globally, including in India. And very soon we'll have two separate listed entities, including the energy business itself. Hormaz is here with more details. Hormaz investors definitely getting excited at the prospects of getting those energy business shares.
Powering along, as they would like to call it. But yeah, it's a good day for the shareholders of Siemens India, especially after the battering that the stock has taken. It's down almost 40% from its highs. But of course, the news flow, as you mentioned, the NCLT demerger coming, the approval for the demerger coming in last night. It has taken effect from the 25th of March, which is yesterday. And the equity allotment ratio has been fixed as 1-for-1. So the demerged entity, the shareholders of Siemens India, for every one share, will get one share of the demerged entity as of the record date, which has been fixed as the 7th of April. So that is another thing that needs to be kept in mind. Now, after the demerger, Siemens Energy, of course, will have the energy business that has been demerged, but the original entity, Siemens India, will have the digital industry, smart infra, and the mobilities business. And going forward, the energy business will, of course, become a separate listed entity as well. And this will, the company believes, will lead to some value unlocking. Guillermo Vieira de Mendonca has been appointed as the MD and CEO of the demerged entity, and Harish Shekhar has been appointed as the executive director and the CFO, who was the head of finance of the energy business, of course. Now, if you take a look at the numbers, now for SY24, Siemens, of course, has a financial year that ends in the month of September, so they follow an October to September format. The energy business grew at 5%, but the overall business grew 19%. And, of course, the margins, too, for the energy business were higher compared to the entire entity on a consolidated basis. For the first quarter of for SY25, if you can see, the growth for the energy business was a lot higher when the overall business actually saw a decline when it comes to growth, and the margins too were higher for the energy business going forward. So positive development coming in for Siemens. It'll be interesting to see now, once the listed entity goes in, some value unlocking emerging for shareholders.
Indeed, the street will now watch for perhaps Siemens Energy India's listing on the stock exchanges. So that will be the value unlocking the street will watch closely. But Prakash Diwan is now with us on the show. Prakash, big news for Siemens. Stock is up 5.5%. How would you approach it?
I think it's definitely something that's been awaited for some time. Gives the ability to investors to allocate money to the kind of business they would like to, rather than things getting bundled. And and to be honest, the combined entity hasn't had any great visibility in terms of earnings growth that could be very convincing. Now, this gives you that flexibility to be seeing two different businesses and evaluating them judiciously, rightly, differently. So definitely a very good thing. And remember, the recent series of events in the global markets, particularly the Heathrow debacle, which was led by lack of power backup and outages that resulted from there, has got everybody wondering whether the power equipment globally is adequately kind of placed, and if that order flow has to start increasing or accelerating, it has to be from players like Siemens and the likes of Hitachi and all of that. So my sense is there will be a spurt in demand for their products, and they've been doing very well. So foreign parentage, Indian presence, global markets, that's a combination that will work very much in favor. But people could argue about valuation, and yes, Siemens has never been available cheap. So if you're okay with the valuation being tending towards a higher band, and live with it for a longer period of time, it normalizes. But otherwise, it's a great buy on dips, especially after this dip.
Okay, all right, Prakash, stay with us. Let's focus on the defense space. HAL, they have got delivery of their first F4x4 IN20 engine. And that, in fact, is something that was a big trigger for the stock. Upasana joins in. Upasana, you could tell us the name of the engine as well. And why is this important for HAL? The stock is up close to around 4%.
That's correct, Nigel. As rightly pointed out by you, HAL is in focus today, and this is a very important update as GE Aerospace has said that it has delivered its first of 99 F404 IN-20 engines to HAL for Tejas LCA Mk1A fighter jet, which was long pending since the past 2 years. Now, mind you that at Aero India, HAL had indicated that GE 404 engine delivery will begin either by end of March or April 2025. Now, what was the key concern? It is important to note that there were supply chain disruptions at GE Aerospace, mainly because of delay in the delivery of F404 engines. Now, GE initially planned to deliver 16 engines annually starting in FY23, but none were supplied until now. Now, this delay has postponed HAL's delivery of LCA Mk1A fighter jet, and to sum up this delay was what the street was feared upon. Now, Elara says that it expects 2 engines to be delivered in April 2025, which were initially scheduled to be delivered in FY25, and 12 additional in FY26 and 20 thereafter, year after year from FY27. It expects 10 to 11 Tejas Mk1A to be delivered in FY26 versus the earlier estimates of nearly about 12 jet engines. Now, this may translate into a revenue of nearly about 3,000 to 3,500 crore is what the brokerage is estimating. Now, it is also said that 83 Tejas Mk1A fighter jets are expected to be delivered within the stipulated time, that is until FY29, and with a likely ramp up starting from FY27 by the company. So this stock certainly remains in focus on the back of this important update.
Thanks a lot for explaining that to us, Upasana. Prakash, what do you make of this one? It's bucking the trend today. The market's a little bit weakish, but this one holds with a gain of around 3.5%. What do you do with it?
Well, Nigel, I think look at the past 27, 28 days, and it's done the same amount of upside, 28, 30% in the last 1 month. That's primarily because of this anticipated move. And remember, defense stocks are the first which have triggered FOMO within most people when things look bad. Globally, there's likely to be defense expenditure that will go up. India is getting more and more sustainably self-reliant. And some of these companies like BDL, BEL, HL have actually been in the forefront of actioning out a lot of the programs that they've seen investments come into. So order book to realization is probably one of the best now. And I think from here on, it will also kind of see a little bit of PE expansion. PE should be about 35 times trailing, but it could probably again move, on a forward basis, it probably has enough headroom to do another 25-30% from here. So whether all-time highs is something which you want to look at or benchmark yourself against, I don't know, but it definitely makes sense to buy and keep accumulating it at lower levels. You had it at about 3,000 odd just about a month back. So, that's the kind of reality check that at times could come in, but definitely great story in the making. Will definitely not let people down.
Okay, all right. So that's a view on HAL. Market's still very, very range bound. There's some profit taking in the large cap space. NTPC is down about 3%. Yeah, Nifty is still struggling close to the lows of the session. There's Bajaj Finance, Tech Mahindra. These are some of the other stocks that have weakened. Prakash, hi, good afternoon. Now, just want to talk about this whole deal, which we now know Ashok Leyland is not getting into. I'm talking about SML Isuzu. There was M&M's name doing the rounds, but again, no confirmation on that yet either. How do you find the asset SML in terms of their bus business? And if at all, let's say an M&M goes for it, would it be would it be a step in the right direction? Otherwise, M&M's been doing great. It's one of your favorite stocks. What about SML?
So, okay, the situation is complex. The bride is quite eligible. We're not sure of the groom. That's the confusion. SML by itself, if you look at, has been fairly okay in terms of performance. The only challenge there all these years has been they've not been able to scale up. Remember the bus business is dependent a lot on certain very small, very, very narrow micro sectors within the economy. And it's not something that has been growing very rapidly or very distinctly in the last couple of years. So they've kind of managed to be steady state, but they've also lost ground in terms of market share and things like that. So it's a narrowing segment And in that, it's extremely difficult to get economies of scale and operating leverage. If somebody were to acquire this business, this asset, and see, Mahindras have done that in the tractor business. They got Punjab tractors, Swaraj tractors, they got Gujarat tractors some years back, and they've been able to kind of digest a lot of these acquisitions very well. Now, whether they can do this with the bus business, which is not a part of the portfolio yet, we don't know. So let's not speculate who's going to buy and when. But on a standalone basis, M&M continues to be something that is very robust. And if farm equipment sales are any indication in terms of the potential, monsoon and post-monsoon opportunity, and of course this whole thing of the Tesla models coming into invading their market share and all, I think is a bit overdone. So it will bounce back. It will bounce back to its 3,400 zones very soon. It's just a matter of time and numbers kind of adding up. But I'm still quite positive on M&M. But SML, I really would hazard a guess in terms of what happens if who buys and when it happens.
What about Zomato and Swiggy? They've had a good run, but over the last 2 days, some concern is emanating. The sell side is not as convinced as they were. Yesterday, it was Macquarie saying that they prefer QSR companies like your Devyani. Today, BofA has downgraded both Zomato and Swiggy to an underperform. Where do you stand? Zomato is at 200 rupees now.
So Rima, I can tell you one thing. Quick commerce also attracts the same kind of attention from and interest from investors. The interest comes in quick, goes away quick. The reason is it's a very rapidly evolving segment. Nobody thought quick commerce would start contributing so much in certain subsegments of the FMCG play or the consumption basket. And I meet a lot of players in the consumption side, the underlying product side. And it's phenomenal the way their dependence on Swiggy and Zomato Blinkit is on. What's going to happen is eventually there's going to be a lot of interest, a lot of new players. There will be an expansion of the market. And whoever ends up becoming efficient in this process. And I think from that perspective, answering your question specifically, Blinkit has far more history to bank on, data richness to rely on. They've done some mistakes and learned from it, which a lot of the other players like Zepto, Swiggy will still have to kind of pay the price for. So I'm very positive on that. At these levels, it definitely makes a lot of sense because it's a long-term secular trend which you can't reverse. So more players will come in, a lot of them will die, a few will survive, and we've seen Zomato do that in its other businesses as well, right? And Zomato brings you a lot of the optionalities of the district and the ticketing business and so many more vectors that could work towards it. But just on the weightage of Blinkit, I think it makes sense to get into Zomato at all.
Okay, all right, Prakash, I wanted your view on Whirlpool. That's a brand that has a decent market share here in the refrigerator as well as the washing machine business here in India. And over the last few years, growth has been fairly okay. Their gross margins have expanded as well. And cash in the books as a percentage of the total mix is close to around 25%. I put out a piece earlier today. I'm not sure whether you had a chance to look at it. And now the stock trades at around 26, 27 times. Historically, it's traded around 45 times. There's that overhang with regard to what the promoter does next. But what would you do with the stock at around 950, keeping in mind that 6 months ago, it was 2,400 odd?
Oh, absolutely. No, I did go through the piece that you put up on Twitter as well. And I can tell you what you've captured, the salience that you've captured. If you read between the lines, it's very simple. The promoter is doing it for whatever reason, personal, compulsion and reason that they would have. But as an investor, to buy into a franchise like this, which is very superior to a lot of the other players in the market, and which can very quickly scale up. In the last few years, Whirlpool has done nothing in terms of new launches very aggressively, new markets, new products. There's nothing much that's been done to kind of, to trigger growth for obvious reasons that, if the promoter interest is the way it is. But if some other players were to come in, leverage on this, build this up, we've seen how Voltas is done with a brand like Beko. You've seen what Haier is doing in India, even though they don't have a localized presence in that sense. So it's a great segment. Consumption overall, especially this particular part, is something which you can't ignore. I would be very positive on Whirlpool at these levels. In fact, this is the opportunity you get when valuations soften because of an event that's got nothing to do with fundamentals.
Interesting. So that's a positive call on Whirlpool. By the way, just pointing out that Siemens seems to have had a bit of a rub-off effect on some of its other peers as well in the MNC capital goods space. Check out stocks like Honeywell, which is up 3%, and even ABB has managed a 3% up move today, despite the fact that the market overall is cooling off a little bit. Prakash, very quickly before we let you go, in this whole pack, MNC capital goods stocks which have now corrected, would you buy anything?
No, I think to be very honest, I told you why the Siemens move could be not just because of the demerger approvals. It's related to a lot of demand coming back from Europe, and the first port of call for European consumers is going to be companies which have MNC parentage, and you named a few of them. I would, if I had to look at the electric value chain, I would certainly go and buy Siemens itself because it has a very robust product pipeline, which can kind of start changing, scaling up so dramatically. So what happens to Cummins 2 years back, should be when the parent started looking at the Indian business to supply its global needs. I think Siemens could also do that once this demerger is out of the way. So I give you that Heathrow example, which is just a trigger, but there's lots that's happening in Europe, which will draw interest or center interest towards the Indian players. So absolutely promising value chain. The domestic guys will also benefit, but they'll probably be secondary in terms of advantages. The primary advantages to these MNC plays.
Thank you, Prakash, for joining in. We will get into a break, but before that, Bharat's growth story is being driven by leaders transforming policy into real progress. And you can hear directly from them at the News 18 Rising Bharat Summit 2025 on the 8th of April and the 9th of April at the Bharat Mandapam, New Delhi. This is an exclusive opportunity to hear straight from Nitin Gadkari, Union Minister for Road Transport and Highways, on infrastructure-led economic transformation, Hardeep Singh Puri, Union Minister for Petroleum and Natural Gas, on shaping Bharat's energy resilience and global position, from Ashwini Vaishnav, Union Minister for Railways, Information and Broadcasting and Electronics IT, on advancing India's digital infrastructure, mobility and communication. Get your tickets today for the summit that defines what's next for Bharat. Book your passes now. Welcome back. Now pushing towards the 23,500 mark. So extending losses 150 points down on the Nifty, with the sensex lower by close to about 350 points. We've had a 7-day run winning streak. Snapped that today. Yesterday was also not really a winning streak. The benchmark indices were flat, consolidating, but with the positive buys. Midcaps had corrected a bit. Today, you're seeing correction across all the key indices, so some profit booking after the vertical run over the last few days.
By the way, that's good news in case you're planning to buy a fancy EV, Rima.
30 lakh plus.
Now you don't have to pay that tax. This was announced a couple of, I think just less than a couple of weeks back. And now it seems the Chief Minister is saying that it's going to be withdrawn, that 6% additional levy on electric vehicles above 30 lakh rupees. So good news coming in. M&M anyways up about 1% for the time being. Okay, let's carry on with the market conversations. And we have Sanjay Parekh, founder and CIO at Soham Asset Advisors, joining in. Sanjay, great to have you with us. Pleasure to have you this afternoon on the show. Hi. So, two-part question. First of all, is the correction over? And if yes, then what do we expect from here? This market has always had V-shaped recovery since COVID. But is it going to be a little more boring and difficult this time?
No. So, you know that we, our fund has a mandate wherein it's a large cap oriented fund. So we take a very active view on Nifty and do communicate. And it's always humbling because at 23,000, we really felt that the risk return is very favorable. And then we saw 22,000, almost 22,200. But, we really at that point, and we sent you the note as well, that we really felt that, the risk return was extremely favorable. If you take earnings yield versus debt yield at that point, earnings yield was 5.3%, which is reverse of price earning on FY26. The 10-year yield was 6.7. So at 1.2% gap, typically you tend to outperform, and there is a meaningful upside over last 10, 15 years, barring COVID or 2008. The another thing is, of course, clear price earning, historical price earning, if you see, we were lower than the averages of the last 5 years. And then if you also take ROE and growth of Nifty, because globally people look at India as a stock for allocation. A lot of global funds look at the simple ROE growth model. So if Nifty has an ROE on 26 at 15.6%, and even at 10% growth, it was implying 3.35 times price to book, which was coming at 25,300, 20,500 on FY26. So at 22,500, it was really, really comfortable, and the risk was extremely favorable. And we've gone on record saying that next year earnings of 1,200, and then in 26, 27 around 1,350. And obviously when growth is less, there's a debate whether India should trade at 18 or 20 times. But we genuinely believe that if growth recovers, we can go back to 20 times. And that would mean from here as well, 15, 16% return in the next 15 to 18 months. So I think, you can never say you can't react another 2, 3, 4%. And you have global risk as well of Trump-related policies. But I think every fall, one can slowly start accumulating. Having said that, this year will be a low of slow recovery of earnings growth. I don't expect Q4 also to be great. It will be a little better maybe. But bottom up, I don't see a big earnings surprise in Q4.
Okay. By the way, just want to point out, guys, that the market fall has simply continued on. Now, it's a near 200-point fall in the Nifty. We've had, in the last about 15, 20 minutes, it's accentuated a little bit. A lot of the large cap economy-facing stocks have come in for additional selling pressure. There you go. That's the heat map. So it's a big red move across the board. And if you look at individual names, Adani Enterprises, Power Grid, L&T, BEL, NTPC, so a lot of these economy-facing stocks coming under pressure. So that's a red screen for now.
Sanjay, your whole M&M in your portfolio, you like autos on the whole, and one of the stocks that, that's a part of your portfolio is M&M. Now there is chatter about how M&M is going out there to, and possibly consider acquiring SML Isuzu. If that happens, what are your thoughts on this M&A?
Yeah, actually, for the market cap of M&M, it's a small acquisition. So we actually feel it's almost like a non-event. it's a small acquisition which will be an add-on to their portfolio. But we're not negative, or we're not saying that they have moved away from the capital allocation policy. I think such acquisitions, even if it's a bit smaller, could be strategic. So we are not negative. I don't think anyway, it's a very small acquisition. So sometimes that materiality matters as well. So it's not digressing that they're getting into areas which are not related. So we are not perturbed by this.
Hi Sanjay, good afternoon. Good to see you again. First of all, good on that call on Vedanta. The last time we chatted, the markets were in disarray, and you said no. We believe that in fact, that you and your entire team believes that you'll make money out here, and you'll stuck to that call, and the stock has done quite well from there. So good on you all. It appears that demerger date as well is in the offering. Now, if you look at your
you all covered it so well. I mean, the last interview really helped to get confidence from us as well. Right. So it was a very, very well covered interview, and really compliment to you and team.
Okay, all right. Well, Shireen did that one, with some support. So that was good. And, actually we had presented that piece, a special situation, I think around 420, 430 rupees odd. So from there as well, it seems Vedanta has got some support. That said, if I look at your portfolio construct, it appears the NBFCs, that's something that you like, because even in comparison with the benchmark, you all seem to be overweight. You'll have a lot of stocks in there. Bajaj Finance is the notable one out there. India Shelter Finance Corporation. Give us the rationale. The rate cuts could be one. You believe the worst of asset quality is behind, and you think growth will be good. Tell us more.
Yeah, so, the thesis was this, and I mean, Bajaj Finance, we've been holding for 3 years. So the first 1.5 years, it did not perform. And then we further topped up after the recent meet. And there's very, very clear longevity of growth was there. For the growth, the valuations were reasonable. The leadership is top class, and now the continuity of the leadership. So it was absolutely, we topped up at that point of time. The two housing finance companies, India Shelter, one is in the lower end of affordable housing, The other one is around mid-size at 25-30 lakhs, which is Canfin, which is a recent entrant that we have. Shriram Finance now been holding for 1 year plus. We again felt then, it was really well placed, and we've been holding. It's done quite well for us. It was before it got included in Nifty. So, and now I think it could pause or consolidate for a while, but structurally for the ROE, and they've maintained their asset quality. And they have now not only a vehicle finance book, but also, the lower end strata where they cater to the erstwhile scuff book. So ROEs are good. Price to book is not that cheap now. So we like them from a structural piece. So these are and then of course we have small weight in Angel, which I think in the next 2 quarters could be weak quarters. But overall, our point was not because of the rate cuts and they benefited. I think some of these are structural positive where they can grow irrelevant of the interest rate cycles. And they've done quite well on asset quality. The housing finance is pretty insulated on the asset quality side. And both of them were Canfin had some recent issues, but it was available really cheap at 1.2, 1.3 times. The India Shelter was clearly bought for the longevity of growth, and they've grown very, very well. Very good pedigree of promoters, and hence we own them.
Sanjay, out of time, but thank you very much for joining in. Great conversation as always. We'll slip into a break on that note. We'll come back and get you a check on what dealing rooms are saying in our segment G Street Chatter. We'll also get you a few PTSD calls.
Do you believe that we could see Lilly manufacture Mounjaro in India anytime soon?
It's of course possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains. And as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
24 was artificial intelligence, generative AI, and its impact across different sectors. What do you think this is realistically going to mean in terms of bringing down the timelines to drug discovery?
Yeah, it's interesting. 24 was the year of GPT and GLP.
Yes,
right. So
that's right. GPT and GLP is right.
Exactly. Yeah. So, but that doesn't end in 24. I think it's accelerating both trends. We're seeing new innovation in incretins and obesity, but also new innovation in AI. Lilly has embraced AI at scale at every phase of our business.
Welcome back. Well, the markets are sitting with a cut-off close around 200 points odd. Automotive is a stock that slipped in the last few minutes. I think we should pull up the intraday chart on that one. And ITC is the other one. You know, that one, in fact, has now moved to the low point of the day, a larger weight on the index. When that slips, it puts some pressure on the Nifty as well. But as promised, it's time for D-Street Chatter. Nimesh joins me to tell us what's going on out there. Well, Nimesh, a bit of a down day, but I think par for the course yet again after the kind of run that we had. And it's that year-end phenomena as well that could be playing out.
Absolutely, Nigel. You know, so for second day running, a bit of under pressure, but I guess, you know, it's more to do with the expiry and not much from a sell perspective. So even today, the sense is there is good buying interest from the larger FIs. In fact, there is a small MOC as well. What happened yesterday? I think for the second day running, there is an MOC basket buying at a leading FI. So it looks like even today the FI number could be could be slightly positive. But again, that also has to be read in the context of the expiry as well. So, in the expiry week, the last 2-3 days of flows seems to be a bit colored as well because of the F1 expiry.
Yes.
So, people tend to cover their F1 positions and sell buy cash and sell future, those kind of stuff. So, don't read too much, but at least there is not big selling is what I understand from an FI perspective. I guess the sector which clearly stands out and where there is buying interest is the financials. So, a bit of rotation happening with the financials as well. Private banks are well bid, and within that, the smaller private banks are now seeing a bit of uptake after a big rally what we saw in the large private banks. So, a bit of churn there. I guess, after the expiry, I guess April will be news heavy in the first 10 days because of the reciprocal tariff on second, and then we have the RBI policy as well in the first 10 days of April. So, going to be quite noisy in the first 10 days of April series, but again, technically 23.98 is a level to watch on the upside. That's a bit of a supply zone or a resistance zone, so to speak. But clearly, I guess from a flow perspective, at least there is not large selling. In fact, there is buying for the last couple of days as far as FIs are concerned. All
right, so the FIs, no worries on that front. I'm just wondering whether some feedback is suggesting that the big domestic buyer seems to be churning its portfolio towards the end as well, which normally we do see towards the end of a fiscal. What about individual stocks? What are you picking up?
Well, so in terms of individual names, Nigel, there are a lot of stocks which are buzzing in trade. So the first stock on my list is TFCI. After a long time, some buying seems to have emerged in that stock as well. Buzzing in trade, the volumes are on the higher side, and the city is anticipating a corporate development very soon. In fact, the sense I'm picking is that maybe there could be some fundraising in TFCI very soon. So that's the first stock. The second stock is Sharda Energy. In the last 1 month, that stock has been in a very narrow range, been consolidating, a bit of under pressure as well. Largely, I understand there is a bit of selling happening, and one of the domestic fund seems to be trimming the holdings in Sharda Energy. So that's the second stock. The third stock is EPAC Durables. We had the management on the channel today. The commentary was quite strong. But for the last couple of days, the stock has been under pressure, largely because I understand there is a selling pressure going on from a leading private equity. Looks like that selling is likely to happen, get cleaned out very soon. So that's the buzz on EPAC Durables. And the last is Shriram Finance. For the last few days, there has been selling in Shriram Finance. A leading global fund was an active seller. Seems like that selling is largely over. There is a first signs of buying interest now back in Shriram Finance at these levels.
Okay, all right, Nimesh, thanks a lot for that. Well, the markets have managed to at least defend the 23,500 odd mark just for now. We've seen a bit of a recovery from the day's low. And just pull up a few stocks. Elecon Engineering, pull up the intraday chart out there. The stock is up close to around 5%. Majority of that move has come in the last few minutes. So I think we should get the intraday chart out there. Indian Shelter, that's the other one that we were talking about with Sanjay Parekh just a short while back. He was sounding quite optimistic on one of those names. So that one as well comes up for you in the screen. So pockets of strength from the broader markets is what we can see. Mitesh Thakkar is back with us. Mitesh, what are you doing? Continuing to hold on to those long positions and buying the dips. The trend is still intact, upward?
I would say so. I still believe that we have a good chance of going higher than lower. So I have a BTST on Kotak Bank. Disclaimer, it's a recommendation for our clients, so there's vested interest. But BTST here with the stop just below levels of 21.25 for targets of 21.70. And Ashok Leyland is the other one. That's BTST as well. Keep a stop below levels of 213.90 and look for 218, 220 kind of a target.
Okay, all right, got it. Thanks very much, Mitesh, for all the cues and the stock ideas today. We'll see you with the market again tomorrow. Have a good evening. Let's quickly move on to an exclusive. CNBC-TV18 is learning that the Zomato-backed Cult.fit is all set for its D-Street debut. There could be an IPO very, very soon. Rachna is here with more details. Rachna, over to you.
Sources have told CNBC-TV18 that Zomato-backed Cult.fit has picked bankers for its upcoming IPO. Axis Capital, Jefferies, Goldman Sachs, Morgan Stanley and GM Financial have been roped in as the book-running lead managers. The company is eyeing a 2,500 crore raise at a valuation of about $2 billion. Now, to put things in perspective, Zomato had infused about $100 million in 2021 in Cult.fit, giving it a valuation of about $1.56 billion. Now, Cult operates over 500 gyms across India and has been aggressively expanding its footprint. In just FY24, the company clocked a total income of around 1,000 crore. But it's not just fitness centers for Cult.fit anymore. Cult has diversified into multiple businesses like EatFit, MindFit and Cult Sport, which constitutes about 30% of its total revenue. Speaking of EatFit, that alone contributes about 24.5% of the total revenue. Apart from Zomato, among key investors of Cult include Accel Partners that holds about 17.25% stake, but there are other key names also on its cap table like Tata Digital, Temasek, Kalari Capital and Chirite Ventures. With the IPO in the works, all eyes will be on Cult.fit.
Okay, all right, Rachna, thanks very much for that. Let's move on now to a special Midcap microscope. Today we're focusing on a stock that has halved from the top, but has perhaps made valuations a lot more palatable. So is it a value opportunity or is it a value trap? Nigel takes a closer look.
Welcome to Midcap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first? For the sharp fall we saw in the stock price, the promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now, that's a significant sell down. And this is not their first move. Last year, they offloaded close to around 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around 7% of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margins. And the working capital management as well has got strengthened. Remember, Whirlpool India's cash in books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front. The stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly, will the buyer be strategic in nature? Well, it's been a whirly path for Whirlpool India. Plenty of twists and turns. But valuations are now lower. Is the worst priced in? Let's see how this one plays out.
Very interesting data that you've compiled there, Nigel. Thank you very much. Let's in fact ask Ambrish Baliga. He's the market expert joining us in the last leg of Closing Bell today. Ambrish, we'll get to the market stocks that you like, but first, come in on Whirlpool.
Good afternoon, Rima. Whirlpool, I think, the announcement which was made by the management that they would possibly exit, clearly that was the one which brought the stock down by, I think, 40-50%. But I think it's a great target for the other players in this field. So in case that happens, they come in as strategic buyers, then possibly at these levels there is value. But then if they, like whatever they said earlier that they could sell in the market, that is a fear. So in case that comes true, we can see lower levels. So at this point of time, I'll just wait and watch. I'll not really buy fresh at this point of time.
Okay. All right. Got that. Amrish, the stock that you have for us today, that is Samvardhana Motherson. Is that the pick?
Right. Exactly. Because I think it's world's leading specialized automotive component manufacturing company, have about 400 facilities, supplies to OEMs across 44 countries. And they have been granted about 2,800 patents. I think it's among the largest as far as India is concerned. Basically, modules and polymer products, wiring harness and vision systems. And India and Europe contributes about 55% of the revenue. Nearly all the top international auto majors are the customers. Making an entry now into consumer electronics segment, I think the first plant should be operational by next quarter. 2 more facilities are starting, Q2 FY26 and Q1 FY27. And they are tier 1 supplier for Airbus commercial aircrafts. And out there also they have a decent order book. Overall, if you look at the order book position, about 30% of that is EV, so clearly future ready. Q3 earnings were a tad bit lower. I mean, like the revenue grew about 8%, but still it was better than what the analysts were expecting. EBITDA margins were decent at about 9.7%. Net debt to EBITDA is 0.9x, which is quite good. If you look at the management vision, longer term, they want to deliver 40% ROC. Revenue mix, they are talking of 75% auto-related and about 25% of new products. Dividend payout policy also is decent at 40% of consolidated profit. So expecting an EPS of about 9 for FY27. And with this, my target price is about 180.
Okay. Stay on, Ambrish. We'll just get into a short break, mandatory, before we wrap up today's trading session. But as we do that, let's listen into Anish Tawakle of ICICI Prudential AMC on the froth in the market, the weakness in the small and the mid-cap space, and the impact of Trump's tariffs.
India lowering tariffs is not a bad thing for the economy, right? So even if we chose to lower tariffs, that would be fine. We've lowered tariffs from the 1990s, and the economy has done well. So nothing bad happens if you lower tariffs. The US, for example, decided to impose steel tariffs. All downstream industries which use steel therefore suffer. So you might as well say that the US has made its own manufacturing uncompetitive by putting tariffs. If the US puts tariffs on pharmaceuticals, for example, more than 1/3 of the medicines they consume are supplied by India. There's no other place that can supply at the rates that India does. So what will happen if they put tariffs? The Indian manufacturers are not making supernormal profits. Demand is inelastic. So prices will have to go up. Right? So I think this tariff issue is just being discussed too much. At the overall economy level, I don't think it matters. Risk-return trade-off is far more favorable in the large caps than in the small caps. In the small caps, you still have stocks that, if you look at price-to-book values, they're excess of 5, 8, and then you look at the moats of these business, the competitive position of these companies, it's not that great. If you look at the balance sheets, there's a lot of, stuff that you typically don't want: very high inventory levels, very high receivable levels. So there's enough minefields in the small and mid-cap space in our view. That's not to say that you can't find anything to invest in, but even in our small cap portfolio, if you look at the published portfolio, we have a fair amount of large caps because we feel that overall they offer a better risk-return trade-off.
Okay, just about 6 minutes left for markets to close, and the Nifty is going to perhaps close below the 23,500 mark. HEG Graphite are moving up for the second day in a row. So HEG is up close to about 3.5%, while Graphite India too has a gain of close to about 2%, and it's moving up on pretty large volumes. We've been in conversation with Amrish Baliga. Amrish, what's happening in HEG Graphite? 2 days in a row, big moves, big volumes?
Rima, in fact, I don't track these stocks too closely. In fact, I was tracking it about 4 or 5 years back, but not anymore.
Okay, and what about Ashok Leyland? They're making some preferential allotment, issuing shares to the promoter, 1 crore shares at a price of 200. The stock is currently at 215. They've also denied, any plans of acquiring stake in SML Isuzu, as was being reported. Ashok Leyland?
Ashok Leyland at these levels, in fact, I like the stock. I think the news which has come is decently positive. And in fact, we have seen the last couple of quarters that HCV, LCV sales had in fact come down as far as the sector overall is concerned. But I expect that over the next 2 or 3 quarters, we could see a decent uptick looking at, again, the sort of execution which is happening as far as infra is concerned. That should be positive for both Ashok Leyland as well as Tata Motors. But I think the effect will be more on Ashok Leyland. So at these levels, I would suggest buying. Possibly we should see, at least about 15 to 18% sort of a move up over the next 6 to 8 months.
And Innocent Bank, I remember in the heat of all the issues, you kind of thought maybe the risk reward was turning favorable. The stock went down to levels of about 600 even earlier this week. It's rebounding. Are you buying Innocent Bank?
Innocent Bank, I would say, it is a buy for a high risk taker. Those with a weak heart should not be looking at Innocent at this point of time. I believe that most of the negative news is already there in the price. And what came last, the write-off, which was close to about 2.5% of the net worth. I suppose that is the last set of bad news. Maybe, if one wants to play a bit more safer, one can wait for the report to come of the audit which is happening right now, for forensic audit. But then valuation-wise, keeping all this aside, at these levels, it's looking attractive. So if one can possibly hold on and wait for the next 12 to 15 months, and possibly also take a 10 to 12% sort of a drop from here, if one can take that in the stride. So this is a good time to buy, hold for the next 12 to 15 months.
Defense stocks are seeing a lot of buying in the recovery over the last 1 week. Defense has been right on top and lots of order wins too. What would your preferred pick be in the defense? Would you play the defense theme as a recovery rebound, and which one?
As of now, I would still play the defense sector because I still feel that the valuations are tad bit still high. I think this is more of a bounce back because we have seen a decent fall in the last close to about 8-9 months, and because of which we are seeing some sort of a bounce back. I would possibly wait for a correction of at least another 15 to 20% for most of these stocks to get in. So for the time being, I would like to stay out.
And what about Titan? Goldman Sachs today said that Titan is one of the stocks that they would bet on. They're betting on a lot of large caps, but Titan is one of them. But the street is concerned about the earnings from here on because of high gold prices.
No, it's just not high gold prices. If Titan was a good story in the last 2 to 2.5 decades. It had a first mover advantage. But then see, in the last 3 or 4 years, there are so many regional brands which have become national brands now. And clearly, you have the competition increasing quite a lot in this space. So I really don't see that first mover advantage which Titan had can really carry on too much further. And valuation-wise, it is still expensive at this point of time. So I wouldn't really buy Titan at this point of time.
Okay, all right. Amrish, just hold the thoughts there. We'll quickly recap the day. And it's been a weekday, you'd have to say. The bulls finally taking a bit of a pause. 200 points down on the Nifty as we're wrapping up. The Midcap index has relatively done sort of slightly better, you could say. The cut there is about 0.7%. Bank Nifty's fallen in sync. Basically, all these indices are down between 0.7% to about 1%. So let's find out where the large cap weakness was. Pretty much across the board. But a lot of PSU stocks and financials along with IT, they've led the declines today. So NTPC down 3.5%, Tech Mahindra 3%, Cipla is down 2.5%. On financials, Axis Bank 2%, Bajaj Finance, the big banking boys, HDFC Bank, ICICI Bank, lots of red on these stocks. Not much, but each of them down between 1 to 2.5% or so. Like I said, IT was weak, so Tech Mahindra wasn't alone. Infosys is also down almost 2%. There's been some weakness on Wipro as well. Other heavyweights, SBI, Lever, Reliance, not quite helping the bulls' cause. All these stocks ending quite lower. Even TCS is down about 0.7%. So largely a fully red screen. The only stocks that have bucked the trend would be a Trent, 2.5% up there. IndusInd Bank is interesting, almost 3.3% of an up move coming in on this one as well. But otherwise, weak day for large caps. What about the mid caps, Rima?
Full reversal. The Midcap index was in the green for the first half of the trading session, ending with a cut of 0.7%. Small cap index down over 1%. And the widening gap between the number of stocks declining and advancing will tell you the picture. By the close of it, 500 stocks in the green for about 2,100 stocks in the red. So on the way down, let's get you through that list first. You had Swiggy as well as Zomato. BofA today downgraded the stocks, and that put pressure on them. Easy Trip, IREDA, Ola Electric, IRB, HCC, Geo Financial Services, which makes its way into the Nifty in about 2 days. That stock too was down close to about 2.5%. On the way up, you had HEG, Samvardhan Motherson, a stock that Ambarish was just talking about. NCC, on the back of order wins, managed a green tick to close up today's trading session. But with that, we wind down on Closing Bell. Thank you very much for watching. Don't go anywhere, because on the other side is Markets Forward.